Are you thinking about getting into the stock market? Keep watching. Hey, what's up? It's your boy Matthew Michael, and in this video, I'm going to be sharing with you 8 things that I wish I knew when I first started trading stocks. Be sure that you subscribe and hit the bell icon so that you don't miss out on any of my future content. Here on my channel, I make how-to videos and tips and tricks videos on how to save and make the most out of your money. I post a new video every Saturday, and this video is actually the first of our Stock Market for Beginners series. So be sure to subscribe and hit the bell icon so that you don't miss out on any of the upcoming content. Alright, so I'm making this series because I want to help you avoid the mistakes that I made when I first started trading stocks. Mistakes are great because you can learn a lot from them, but it's even better when you can learn from someone else's mistakes. Alright, that's enough of me just talking though. Let's get to it. The first thing that you need to know in order to start trading stocks, it's kind of like step 1. The first step is you need to open up a brokerage account, which is fairly simple and can be done in minutes online. If you're just starting out, as I'm assuming you are, you probably want to start by trading on a platform that requires no commission fee, and also by smashing that like button. Alright guys, after you did that, back to the biz. There are actually a couple of platforms that offer commission-free trading that you can sign up for and will give you a free stock just for signing up. These 2 platforms are Robinhood and Webull. I personally recommend Robinhood because it has a lot more trading options and has a beginner-friendly interface. And it's what I personally use for my stock. But Webull has no commissions, so it's good too. Alright, so the second thing that you're going to want to know is that the stock market is like a roller coaster that over the long term, it's always going to go up. The stock market averages an 8 to 10% increase in value every year. But don't put any money in the stock market that you may need anytime in the next year, because you may not see the increase that you want when you might need it. It's also a good idea to start by investing only 10% of your paycheck so that you also have money to spend, but you're also building your portfolio. And while the stock market averages an 8 to 10% increase every year, some years it goes down. But the longer you hold on to the stocks, the higher they'll go. And when stock prices are low, this is a wonderful opportunity to get more for less, for an even greater return later on. In the stock market, it's good to buy a company when you feel like you're getting a company for a good price. And number 3 is that whenever you buy a stock, you're actually buying a small piece of the company and become a partial owner. How cool is that? It's important that when you buy a stock that you know what the company is about. And Robinhood is great about putting a company description on their little page when you click on it. So when you click on their page, you get a great idea about what the company is about. Being a partial owner, you're going to want to keep up with the latest news about your company because that affects the price of your stock. Another thing that Robinhood is good about is having all the news about your companies all right there on the homepage. So you don't have to go somewhere and do different research. It's all right there. Is this making sense to you guys? If it is, can you please comment yes or I get it or something along those lines down below in the comments, because I try not to lose you guys and I just want to make sure that I'm making content that you understand. Alright, number 4 is not all stocks pay dividends. A lot of people get in the stock market just to receive dividends, but they don't realize not every stock pays dividends. Like I said earlier, it's important to do your research on a company before buying so you know what you're getting. Also on Robinhood, if you scroll down to the bottom of a company, it kind of does the work for you. It'll actually show you the dividend that the company's been paying out each year, if the company pays dividends. When you receive a dividend from a company, they typically pay these out 4 times a year. And it's typically larger than that of what you would receive from a bank. Going off that, here's number 5, and I can't stress this enough. Y'all don't lose money in the stock market until you sell your stocks. Only if you sell your stocks. So if the value of a company goes down and it's still paying you dividends, you're actually gaining money off the company still. And the longer you hold on to it, if you pick the company that will perform, the value will go back up even higher and you'll still keep receiving dividends. which will create a compounding effect. And for those of you who don't know what the compounding effect is, it's the best feature hands down about the stock market. It's basically the ability for your money to increase, fold over, and continue making you more money. So let's say you have $1,000 worth of stocks, for example, and they pay you 10 times per quarter, 4 times a year. Without even considering the increase in the value of your stocks have paid you over $40 this year. That's enough for you to buy more stocks that can pay you dividends. And over time, as you acquire more stocks, you'll have a higher dividend payout per quarter, and you'll be able to grow your money even faster. And number 6 is there's never a right time to begin trading in the stock market. When I first started trading stocks, the stock market was at all-time highs, meaning that all the stocks that I bought were expensive. And shortly after that, my portfolio began to nosedive. And I even made the mistake of selling some stocks while they were down. But in doing that, I learned a lot. And that's why I'm making this video. So you don't have to make the mistakes that I did. The sooner that you start, the better off you'll be later on. It's better to start young while you can still recover from mistakes that you might make early on. The sooner you get the hang of it, the greater returns that you will make. Just a couple of years can make $1 million difference. So start soon if that's something that you think you might be interested in. Number 7, you don't need a lot of money to get started in the stock market. You can start with $1. You can start with $5. Just get started. Sign up with Robinhood or Webull, and they'll give you a stock for free. I'll leave a link in the description down below, so y'all go check the description out. I tried to save up $1,000 first, and I missed out on some stocks at great prices. Like I said, I started at the top, but when I first started saving that $1,000, I would have been able to ride it up like this. Your boy would have been set. Alright, I'm not sure if this applies to everyone, but the 8th point in this video is the stock market is kind of addictive. Before I had a stock market portfolio, I didn't have a care in the world. On the lowest of keys, I still don't, but spent most of my time watching Netflix and doing homework. Now I'm more worried about how Netflix's stocks is doing rather than what's on Netflix. And even when I'm in my classes, I find myself checking the stocks and how they're doing. So I care a lot more about things that I wouldn't have even thought about, like government trade deals. I think I'm growing up. Yeah, so the stock market can be kind of addicting. Did you learn anything from this video? Thinking about getting into the stock market? What were your biggest takeaways from this video? Let me know down below in the comments. Also, let me know any questions that you might have that I can answer in my next video. If you like this video, please smash that like button and share it with a friend. Subscribe so that you don't miss my next video. I post new videos every Saturday. Thank you so much for watching. Peace.